G'day there. Welcome to the closing bell on the 28th of March, on the Thursday, because we have Easter, of course. Hope you're having a nice little break. Today, I'm going to bang on about gold. I know a lot of people probably thinking about it, and I just want to point out the big picture, but also a couple of gold stocks that may not have really run yet. There's a lot of stuff out there that's uh, really hasn't been running with gold, but I'm starting to see some buying interest come in. So there is a bit of bigger money, I think, starting to have a go at a few of these gold stocks. A few of them are running pretty well. I've had a bit of a strong go at them in my trading services, especially one just recently bought a whole bunch that are going well. And I guess you might be thinking, if you're not on board, well, can I join the fun? Is there value there? So I'll throw out a few at the end for you to consider. And just looking at the gold price, really big picture. I may have taken you through this story before, but just to, outline it. When the trend's on, you don't know how long that trend's going for. That is the run from 2002 to 2011. And look how long those trends can carry on for. Yes, there's lots of fits and starts, periods of, a year or more, or months and months of going nowhere or selling off. But the trend was beautiful and strong, wasn't it? Just holding above the 20-month simple moving average there, with the 10-month exponential as the sort of decider on that trend. And, it really held beautifully. So when a trend's going, you've really got to let it do its thing. So we don't want to get shaken out or nervous or, get impatient if it spends time stuffing around. You've just got to really trust those trends and go with it. But we have a sort of special situation as this trend starts going again, because we've had 3 years of consolidation. And, my hope is, like the Coke bottle I keep talking about, when you have a market stuck for a long time, when it finally does really break, it can be much bigger than you expect. But the way I look at these ranges is that, I'll look at the correction. So we've had that correction, which really defined the last few years trading. And I've been trading around that range and the point of control. I've told you, you can go back on my videos, market trending higher. I want to be looking at the false break. So the sell-off, stopping people out and then returning to the range. That's when I really want to get long, and I did in some gold stocks. Then you expect it to revisit the point of control. And the oscillations around that point of control can go on for a long time. And you can see that's gone on for 3 years. But also there's areas outside the range that can prove to be resistance. So it can look like it's broken out and fool people into getting too bullish or too bearish, and then you can have a mean reversion event again. So what that would mean is that we've got this range which got created, and then I'm setting up areas outside the range where I'm saying, look, there could be, say, on the downside, support at those zones, which is 25% below and 61.8%, being that Fibonacci 618. So that can end up being support, and then you can see another mean reversion event, and you can see there it got very close to that level before returning to the midpoint. And the point being, we are now in that area above the range where people are sort of getting super bullish and expecting that it will just carry on from here, which I'm hoping it will. I think it can. That's the theory I'm running on at the moment. but just very aware that uh, on the top side of this range, 25% above it, this is where we are right now. And then there's that level 618 above it. So the strangest thing can happen where gold can even just keep running and hit that, 2300 level. And it could have quite a substantial sell-off from there, even all the way back to the moving averages, the 20-month moving average, and even all the way back to the midpoint of that whole range, the point of control. I've seen stranger things happen. So that's why as you allow a trend to develop, and we're saying, look, this looks like it's away, long-term trend shift there. We've had the retest of the high, the third retest, which then saw a correction back to the midpoint, point of control, also back to the long-term moving averages. And it's turned back up, monthly buy pivot. So that was very strong there, saying, right, this could be away now. And that's when I added more gold stocks. And then it spent a few months stuffing around, holding above the 10-month, and now breaking out above, to a new highs on the whole move. So this is where it's, market saying, is this thing going to carry on? And it can be tough work getting through these levels. But to be, allowing the trend to take shape is to say, right, well, let's let this 10-month moving average, 20-month, let's let it do its thing. Unless we get a complete sell pivot in gold and it crashes back below those highs, which it's been struggling with for years around 2100, you can be, bullish and say, let's let this thing go. If that happens, then, fine. You're then wary because, it's gone to retest that major resistance. Selling pressure comes in, sell pivot, false break of those major highs. You're then saying, right, well, now it's odds on we're going to go and revisit that point of control again. And, no reason why I can't just then turn back up from there, of course. But, these things move in fits and starts. So that's just to say, look, we're letting this thing go. It could be away, but there is levels of resistance that we're, aware of and saying, well, it can still struggle around that area. But let's hope it's away, because when it's away, it can just go and go and go. And there's no reason why it can't just hold above the 10-month exponential for a long period. As you can see there, the first monthly close below the 10-month was there, and then first close below the 20-month was there, and then the long-term trend shift was there. So, we could be miles away from that sort of thing happening. I think the market becoming a bit more convinced that this could hold and create a new range. And also, aware that it's breaking out of really a 13-year range. That was the old high in 2011. It's done lots and lots of work for the last few years around this old high. You can see the midpoint, the point of control, very close to that level from 2011. So lots of work done deciding which way it's going to go. And if it is up, well, you've got to have the imagination that it could be a long way up once it breaks away from that old major high from 2011. So that's sort of how I'm seeing gold right now. And, looking at the stocks that are out there, I can't say too much, I guess, about the ones we're in, but I will show you one that we are in. Now, this one is Regis Resources, and, full disclosure, I sent an alert to buy this one recently around the current level. And I think it's interesting because it's just gone into a trading halt, and I think it's going to be something about the DFS on the McPhillamys project. And look, the stock was up about 5% or something on the open, which was more than most other gold stocks, which was interesting because it's been under pressure recently because of all of the weather problems that have been happening. And when it just gaps up like that in a big way, and then they go into trading halt, my suspicion is that we're going to see some good news. McPhillamy's FID possibly happening in the June quarter this year, adding possibly another nearly 200,000 ounces for 10 years, heading towards 500,000 ounces a year. And this stock really unloved due to the fact that they had a really big hedge book that absolutely kneecapped them for the last few years. You can see, dropping from $6 down to $1.50. And that has been a massive noose around their neck. They actually bought that out last quarter. So they're now looking at being unhedged. The expectations for this year, probably pretty high cost, but get into your mind of a gold price that is possibly doing a major breakout. And when you've got a high cost operation, with low margins, gold takes off $200. That can increase your margins massively. If you're only really making a few $100 margin after all costs, total all-in cost, all of a sudden your margins are expanding rapidly. And with the loss of that big hedge overhanging them, is this one that's going to surprise to the upside soon? So just looking at the structure of this, I'm always looking at these major waves and the way that they pull back, usually, a 75% to 87% retracement of the previous rally, which is where I start getting interested and watching out for how prices move. This was back in 2014, 2015. And as I talk about these ranges that develop, I talk about the range that's developed and the fact that outside the range is often areas where you find resistance and you see mean reversion, but then eventually that'll be finished and then it's off to the races again for the next big move. So, I'll even, just for interest's sake, let's have a look at the way it moved in that range. You'll see 25% above, 25% below. That's where the false breaks occurred. And then 618 below is where you could see buying support. Look at that, got very close, back to the point of control, and then it was off and running. So these ranges have a structure of how they develop, which really confuses everyone, is how it goes. And you can see, pulled back into that buy zone area of this previous large wave. You're waiting and watching and, trend shift occurring, and off it goes to the races. And, all of these retests of the long-term trend shift, lots of volatility. And then we had it getting absolutely creamed. And now, there's the clear out going on, that long-term sideways motion, really clearing out people who have bought long and wrong up here. And you're waiting for the moment when that's ready to take off again. And the long-term trend had shifted there, a failed attempt to rally. And we've got the long-term trend up there. So it's trying to look like it's turning around. Obviously, it's going to be, breaking out above the high of that range can be a bit of a starting gun, which will be sort of above 250. And, if I'm, again, looking at how these ranges develop, I look at those ranges up close and I'm sort of looking at that. And, you can see the buying pressure coming in, the buy zone there, selling pressure at the sell zone, and revisiting the point of control over and over, and, waiting for this thing to be ready to go. So, with that news, is it going to come out and be good news and turn this thing around and get possibly, monthly buy pivot within that long-term uptrend, because just changing. And I just expect that with gold prices, if gold can really take off, heading up through that 250 area, it should start to trend again. Always in fits and starts, but you're looking at a situation that may be similar to what we saw long ago. If we're looking at this wave higher, you can see that that work happening sort of in the buy zone of that wave right now. So it may still have more time to go, may need to prove itself a bit more. It's still stuck in the range. It's not one that's taken off yet. And this is what I was looking for you, was something that hadn't already run. And with that news, let's see what comes out. Maybe it'll start trading again on Tuesday. And if the market likes it, it could be ready to surprise a bit to the upside. So that one, I think, interesting, especially if gold can keep running. Do we see something similar to this for Regis? And now the other one, that's probably the really high risk one, which looks similar, where it hasn't really run yet, would be the serial underperformer, Resolute Mining. You can see it's, again, one that's been really hammered. They've had lots of problems with their underground and just constantly sort of under-delivering on expectations, and the market got pretty sick of it. You can see it's really plumbed the lows. It's gone all the way. Last time it went down and had a final false break, and sort of similar to what's happened here, where you've had, everyone's got completely hammered in this one over and over again. So I think people a bit gun shy. Some numbers I'm looking at are that, next few years, expecting, a big uplift for 24 and 25. I mean, God, I've even seen numbers with a free cash flow yield approaching 50% in 2025 and, around 20% in 2024. So, a big uplift potentially coming. And the situation technically, it's not away yet. It's had a nice reversal here, you can see. The long-term trend is up, and it's sort of finding support around the long-term moving averages, but it's been fits and starts. It hasn't really been getting away. There's a lot of pressure probably still on the stock, but it's just showing some signs of life. Is this going to be a monthly buy pivot? We're at the end of the month. The last one didn't really work, but I don't just buy the pivots, and can't tell you too much, but I'm just observing and creating calculations after they're created. And another one would just be signs that there is a bit of buying coming in. You can run away basically below that low, which is still a long way from where we are. That's down at what, 15 cents or something. It's up at 40 at the moment. But that's one that may come back to life if gold can really rally. So this one, really a high risk punt for those that like that sort of thing. If gold can really get going, I think you'll see a bit of interest coming back into Resolute Mining. All right, well, that's it for today. There is definitely some interest coming into gold. Can it carry on? I think it's possible. But yeah, I set out those sort of key resistance levels that are still lurking around in gold. So just be aware of that. All right, cheers.